Welcome back to the Dividend Diplomat YouTube channel. You know you're rolling with Bert, the Hurt, and Lanny from the Dividend Diplomats. Cheers. Good morning, everybody. We're here to talk to you about a little bit of a dividend investing dilemma that I'm working through.
But before we get started, everybody, smash that subscribe button. Give this video a thumbs up. Everybody, let's go. Let's help Lanny work through this dividend investing dilemma. I'm excited to work through it. And everybody, I'm testing it out. I've heard your feedback that it sounds muffled. Trying to work through some new headphones here. This is the first video. Let's see if this solution's better. Let me know in the comment section how it comes through from your end so we can see if this is going to be here for the long haul.
All right, guys. Again, we're recording this here April 2nd. So don't worry, no April Fool's jokes are built into this video. I appreciate you guys for riding with us all the way up to almost 13,000. Guys, help us get there, by the way. For those that are new, know that, or for those that are new, don't know that I've been buying VYM every Monday for my wife and I, at least 2 shares, so 4 shares. A Vanguard's high dividend yield ETF, because Vanguard ETFs are solid. I mean, Bert, what's your take on Vanguard overall?
I hate it. They're the worst. No, I'm kidding. They're great. They've grown. They've helped individual investors join the game, reach financial freedom by creating low-cost mutual funds, and now they've rolled out their massive low-cost ETFs. That's been their passion. That's why we like them so much. That's why Lanny is repping the hat. Yes, everybody, invest like a boss over there. They've been great, and they've helped out so many people. How could you not love Vanguard, and how could you not be a boglehead if you are an individual investor?
Exactly. So yeah, Vanguard, it keeps you steady, with investing, not timing the market. Here on this channel, we're dividend investors, building dividend income, which we think is the best source of passive income on that journey to financial freedom. And what better way than to buy the high dividend yield ETF that Vanguard offers in VYM, which I've been buying since the mid 70s in share price, all the way up to almost $115 per share recently.
How bad do you wish you could grab it in the mid 70s once again, Lanny?
If I could turn back time. And they kept their quarter, one dividend was flat compared to last year. You could probably check that out in the last video. If you haven't caught the blog article, I hit a milestone. I have now over 1,000 in just my own taxable stock brokerage account of dividend income coming off of VYM. But then I was also buying Store Capital. Warren Buffett also owns a lot of Store Capital, ticker symbol STOR. They're a big single-owned, entity REIT in that space. So high dividend yield, player right there with well over 5% dividend yield. And guys, we hit over 400 likes on a video 2 weeks ago, and I'm at 200 shares now of Store Capital. So I've invested, quite a bit, probably around $6,000 into Store Capital, my own money, Store Capital.
Yeah, and I think that's kind of where the big question and where the big decision point's coming along. Lanny's been buying VYM weekly. He's been recently buying Store Capital weekly. One of the questions we get, I've been buying Johnson & Johnson weekly. My wife and I have been adding 1 share. One fair question that we always get in the blog, in our comment section of the blog, in the comment section of the YouTube videos, and responses to tweets when we throw them out there is, when are you going to stop building this position? When is enough going to be enough? When is it going to become potentially too large of an allocation to your portfolio? And I would imagine that's kind of a lot of the question, what's causing a lot of the question for you here, Lanny, is you've been doing VYM for nearly 2 years now, and it's been awesome. As you said, it's grown to over $1,000 of dividend income. What is next, though? Like Goldberg, who's next?
Yeah, who's next is right. And on my blog post, in my heart, I'm like, you know what? I want to get Vanguard high dividend yield because it's around, if I owned, I forget how much I even own, a number of shares. I want to say it's in the 320s, maybe 330s. I'm just doing a quick double check here. Yeah, I own 330 shares, and it's about 100, 112 at least a share. I have like 37,000 in my own account of VYM. And I'm like, maybe I'll just get it to $50,000. I'll get it to 50,000. And, you do the math. And that's the equivalent of buying another 115 shares of VYM.
Yeah. So still some time to go, especially if you're sticking towards the weekly strategy, but you've maxed out where you want to be with store capital too. So you have other potential cash to start doing a weekly purchase. Start building that transition and start making it you phase out of one, phase into another, or just start going both. That's a great question to ask as well.
Right. And I don't want any new stock positions. That's hard in and of itself. You know what I mean? You know about that, Bird.
Yeah, Lanny's going to buy every one of VYM individually and just start adding them up individually instead of just buying the ETF.
Yeah, right.
Yeah. No, but in all seriousness, it is fun not having to add stocks to your tracker. It's fun not having to monitor new positions. It's great when you can just continue building ones that you already own. So what you already own is a substantial position. You're not owning 20 companies where you have $500, where it's just a lot to monitor for not a massive position. So I am fully on board, Lanny, with your thought of not buying and adding a new position to your portfolio.
Exactly. So, two things here in this, I want to just kind of discuss with the community here to get your feedback. Talking with Bert, my best friend over here, trying to get his feedback. And, I'm looking at VIG, ticker symbol VIG. It's, another Vanguard ETF. It's called the Dividend Appreciation ETF, which, has about 267 stocks, and the top 10 holdings have Microsoft, United Health, J&J, Procter & Gamble, JP Morgan, Visa, Home Depot, Coke, Broadcom, and Costco. And I'll put the chart up here. So over 260 positions.
This fund's massive, Laney. It has almost $77 billion assets under management too. And that top 10 holding is only 30% of the overall thing. So the other 250 positions still account for a majority part of VIG too.
Yeah, so there's that. And the reason why you do that is because you get a lot of performance, because there's a lot of high growth dividend payers, plus some great dividend growth with it. In fact, the price to earnings that they say on the ETF is about 21. Payout ratio looks to be under 40% on the ETF. The 5-year dividend growth rate is almost 10%. But again, the dividend yield's better than the S&P 500. You get around a 1.75% dividend yield. And they've performed about, I would say over 8% in the last year and at 82% in the last 5 years. So that's an option for the ETF, whether I want to do that to replace store capital or do I use VIG to replace VYM. But then, Bert, I'm also looking at VOO. Do you want to kind of talk through some of the high points on the S&P 500 ETF?
Yeah, so obviously S&P 500 ETF is set there to mirror the S&P 500. So they have 507 stocks under their fund. This one is a significantly larger fund. I joked that $77 billion is a massive fund. Well, this one, they said, hold my beer here. We are $809 billion asset under management. Their top 10 holdings make up almost 30% as well, and they include Apple, Microsoft, Alphabet, Amazon, Tesla. It does sound and feel exactly like the S&P 500. You can put the chart up there to get the rest, so you can see Berkshire, Meta, United Health, and Johnson & Johnson as well. I think what's interesting with VOO, obviously you get the broader index exposure, so you're going to have a lower yield reported on there. The reported yield on Vanguard's website here is 1.34%.
I appreciate that, Bert. So, and you're going to get a good dividend growth rate on them, anywhere between, 6 to 8% dividend growth rate from VOO. And you probably saw our video on VOO and some of the other ETFs, the other 5 ETFs we covered. They had an 8.8% dividend growth year over year or quarter over quarter. So again, you get dividend growth, albeit a lower yield, but over 5 years, they've performed over 90% and relative to VIG, which is over 81%. So
yeah, I think another discussion point between the two of them and things to keep an eye out for are the expense ratios here. So let's take a look. Obviously, we love lower expense ratios for obvious reasons. They're less expensive to hold, less of your money is being taken out to manage the funds. Here, Vanguard, compared to the sector, is always historically lower. Vanguard is known for those low expense ratio ETFs. When you compare the two, VIG, oh, they have a pretty high expense ratio of 6 basis points. And you go 0.06%. VOO is just like, again, let's hold my beer on this. Our expense ratio is only 3 basis points. Sorry, three. Yeah, this is how you do it. 0.03%. Why? You can probably guess a little bit here. It's easy to monitor the S&P 500. There's a lot less maintenance that needs to be done from the back end managing for VOO. VIG, it's going to take a little bit more time to do a little more research to find those dividends that they want to appreciate a little bit more to get that higher yield and to get that performance. So there is a little bit more management when you're going through VIG versus VOO.
So guys, that's the dilemma. What do I do with VYM? What do I do with store capital? I'm going to replace store capital no matter what. And that was around, it could have been anywhere from as low as $60 in a week to upwards. I just bought 10 shares to close out my position to get to 200 last week. So I was buying over sometimes $200 in a single week, close to $300 in a single week. So, so what I'm asking here is what do you guys think I should move at least $60 to $200 a week into? Do I do another ETF? Do I do Vanguard, dividend appreciation ETF, VIG? Do I do VOO and really just start juicing that train up? Lower yield because store capital is over 5%. Or do I move that into a individual dividend stock such as PepsiCo and do what Bert's been doing with J&J? Do I move that into another stock? That might be a higher yield than these Vanguard ETFs.
Yeah, and I think a lot of it's going to come down to preference, to your point, Lanny. Maybe that if there isn't an individual stock, this is always a great fallback option. Eventually, though, to your point, you're going to have to start migrating VYM into something so it doesn't become too or thing. Or so can you start moving store, but then also moving VYM into one fund so you're only making one weekly purchase instead of two? Or could you move VYM into this fund into the future, and to your point, store capital into another individual stock? I mean, there are so many different ways that you can do this. You can start today and start with A, end in Z. There are so many different options of what you can do, and that's the beauty of it. But regardless, these are two great funds that if you came back and said, I'm just doing this, I'm going to start investing one share each in these every week, you'd be like, yeah, that sounds awesome. Nice job, Lanny. So everyone, yeah, again, I'm going to be curious too. What are you saying in the comment section below? What have you started this strategy like us with investing in ETFs or investing in individual stocks? Please let us know. Also let the Cavs know too, because they could use some help here to end this season.
Yeah, Cavs need some help. So I need some help figuring this out. Would love your feedback on how to make it easy. Keep me on the journey to financial freedom, building that passive income stream via dividend income. Would love your feedback. Definitely leave it in the comments. If you haven't already, definitely subscribe to the channel and like the video. I'm sure I'm not the only one out there sometimes with the dilemma of what to do and where to put my money. At least I've given my options that I'd like to do, but I would love your perspective.
That's absolutely right, everybody. So again, thank you for your support. We appreciate it. It's going to be hopefully some great discussion here in that comment section. You want to send us out of here, Lanny?
You got it, guys. Enjoy your Sundays. Drink your coffee. Drink your beer. Enjoy Cleveland sports. That was Bert and Mr. Lanny from the Dividend Diplomats. Over and out.